in terms of what I'm accumulating here, and as for both of us, our portfolios have gotten a lot larger, right? So the new position sizes we're taking at a 5% weighting is a lot more money than it was just a few years ago, right? So I'm also considerate of that, right? I mean, my portfolio is up 400% year to date. I have to be considerate of the position sizing. Like it's grown enormously. So now when I'm taking a 5% position, it's a lot of money. And so I'm trying to be more thoughtful. Like names that I've talked to you guys about, Amcor, PLab, a PLPC, which I talked about yesterday, the power grid name, GXO, the logistics and robotics names. All of those names are trading at 1x sales and sub 20 PE. And they're all thematically relevant. When the market does want to look for those opportunities, it's a lot easier to bid up names that have theme relevance. And so that's where I'm looking. I'm looking for reasonably priced names that fit into really, really hot secular trends that still have been neglected on a valuation basis. And the more I look, like today, I was texting Logical. I was going through some healthcare names, not biotech names, but healthcare names. I found so many reasonably priced, profitable stocks trading at like 18 PE, 1.2x sales with amazing charts. I was like kind of overwhelmed. I was looking at like 4 or 5 names today. I had to expand my list to 10. I'll probably spend the whole week now researching those 10 healthcare names. Maybe I'll open a position on one of those in the next couple of weeks. But my point is that there is reasonably priced stocks in this market. There's a perception from people that because markets are really high, because S&P 500 is at all-time highs and keeps ripping, that everything in the market is expensive. And to Logical's point about cheap biotechs, to my point about some of these cheap thematic plays, that's not true. There's a lot of reasonably priced stuff. And so, yeah, you can own the market category leaders that have gone up 800% this year if you own them at a good cost basis. That's important. If you own them last week, yeah, when the market pulls back, you're going to get buried. But if you own them 4 months ago when these names were at multi-year bases, you're not going to get those prices again, even in a market crash. Like Nebius is 135 today. Do you think it's going to go back to my 24 cost basis from May in a market crash? I do not think so. And so once you lock in those amazing cost bases, those, you guys know I hate the term generational buying opportunity, but those stocks can become generational holds for you because you can hold them through multiple cycles. You can build a portfolio that survives through multiple cycles. Like, a lot of people talk about how Warren Buffett's portfolio was up during the dot-com crash because he had a bunch of cash, he was a bunch of staples, and he deployed cash, and there was a rotation out of all of this tech into staples and profitable companies. But during the actual period of the dot-com bubble, Buffett underperformed significantly, right? There are areas and times in the market where your strategy won't be working. But if you want to build a durable portfolio that year after year after year, cycle after cycle after cycle, whether it's a tech forward cycle or whatever is the leading industry at the time, been tech for the last 40 years, it will be tech for the next 40, in my opinion. But even if you believe it's going to be something else, the idea is you can position yourself in names that will perform through multiple Fed rate cycles. Not like, oh, I have to buy a bunch of stuff when the Fed starts hiking rates and then sell a bunch of stuff when the Fed starts cutting rates and do it all over again next cycle. Like, come on, bro. Like that's an insane waste of time. Along the way, you should have stocks that you are planting seeds in. This is critically important. Like this is how you get wealthy and not just make pocket change in the markets. If you want to actually make real money in the markets, like life-changing money, this is how you do it. By finding compounding stocks that will perform over not just years, but multiple cycles, business cycles. And you can find names like that if you buy them appropriately, if you're cognizant enough of TA and the thematics around you.
So
Yeah.
Stock Talk, would you say that a huge component about that methodology is age? Because I
Yes,
feel like this is not appropriate for certain age ranges.
I agree. Yeah, it's all conditional, right? You know me,
Got
Brian.
it.
I speak from my perspective, right? So, is it apply to everyone? No, you're absolutely right. Somebody who's older, or maybe somebody who's in a position where they have to generate a weekly income from trading. Like, I don't recommend that anyone ever put themselves in that position. If you have a full-time job and you're considering to quit it for trading, you should not do so unless you have material savings, in my view. But I'm not giving life advice up here, but that's just practical, I think. But there are some people who claim that they need weekly income from trading. It's always hard for me to wrap my mind around that, because I'm like, at what point did you decide to start trading? Did you decide to start trading without some sort of savings, or like, it's important. You can't just say you and the price I had bought it at and the valuation, if I had understood that better, then the market would not have been able to force me out of the name. I did a 2-hour lecture on my conviction framework for our members. It was like maybe an hour and a half actually, but it was this week. And I just went over everything on how I develop conviction, what I look for in charts, what I look for in catalysts, what I look for in balance sheets. I went through literally my entire process. So if you're in the Discord and you haven't seen it yet, go look at the recordings channel. But in that workshop, one of the first things I said when I was defining conviction was, I said, in my view, conviction is your ability to hold stocks through inevitable volatility. That is my definition of conviction. Because the volatility part is not debatable. If you've been in markets for more than a day, you know markets are volatile. You know strong stocks go red all the time. The best stocks pull back all the time. There are moments of panic. There are moments of excitement, et cetera, et cetera. Everyone knows that. Up and down, up and down, and up and down. Mostly up, but up and down. You didn't take a rocket science to figure that out. So because you know the volatility is inevitable, what you should ask yourself as a market participant is, how can I prepare myself psychologically to encounter that volatility when it comes? It always comes, right? And when you start asking yourself those questions, that's when you really get to what is a great execution process. That's when you really start figuring it out. Like, oh, I understand it now. That's like an I understand it now moment. When you start thinking about your money that way and saying, okay, the goal here is to play the ball